take over and start the recording. Hey, Steve and Andy, what's going on today?
All right, thank you. Hey, everybody. Hello, Andy.
Hey, Steve. Hi, Scott. Hi, everybody.
That's right. Andy was on vacation last week, so we got the whole team back. All right. Yep. But Chris did a great job. Good future in web broadcasting to fill in for us when we're gone. So good to know.
Nice.
Yes, the TI family continues to grow. A lot of growth out there, a lot of interest in the market and our products. So we're grateful for that. And we'll get started here. Just a reminder, Andy and I are literally original users of the product, and we're now not only using it, but employees of the company, but we're going to talk about a lot of things that we see, and our opinions here are not to be construed as any specific or official financial advice. If you need that, you got to go seek the advice of the people who took the tests to charge you a 1% fee, and then go have lunch looking for more money to put under management. All right. So as I said, we've been doing this a long time, and as I also said, there's a lot of new people, not only to the markets, but to our platform, and it's a very robust platform indeed. So the learning curve can be steep, but we want to try and help people shorten the learning curve as much as we can, essentially through these webinars and making ourselves available in a visual sense. The telephone doesn't work, it's not very efficient, but we can get a group of people together. Barry's room is a great place to start each day from bell to almost bell. He's got a free community of traders with great ideas that are day traders. For the most part, a few swing traders in there, I'm sure. We're slowly loosening Barry up to warming him up to swing trading. But nonetheless, it's a free a place to go and not only learn some trading stuff, but definitely our platform. Barry is very generous with his time and often reminds us to send people in there if they have a question and they need a visual demonstration. And then every day at noon Eastern, I did it today, Andy will do it Friday, but one of us will take over for an hour and just kind of change gears and give a different set of eyes, different set of opinions on how to do things. For instance, Sean on Monday is a great is a great options trader. So if you have a lot of questions about options or how you might be able to use trade ideas to monitor some options stuff, you can talk to Sean on Mondays. But the point being, we're here for an hour, and we hope that you guys will take advantage of it each day. There are certainly regulars, but it's always nice to see new people come in and say, hey, I was sent here. Can you please show me how to find, a stock making new high above yesterday's high of day? And not a problem, and everybody can learn from going through those exercises. So don't forget those. Don't forget that those are available to you, and the link down there, trade-ideas.com/live, is the redirect link. And like I always tell you, once you've watched it once or twice, YouTube has you figured out. And every day at noon, if you click into your YouTube dashboard, it'll suggest that you click into the Trade Ideas live support session. All right, I talked a lot about using the human and machine together today. I'm sure some of you were in my noon session, and I just reminded people that really the AI is there for a value, especially for newer traders who are just overwhelmed by the market and they're not sure what to focus on, where to enter and when. That's where the AI gives you value, but it's a two-pronged attack. From there, data is coming in, things are in constant change, and you, the human, are a better manager of that risk once that trade is on. So it's the human and the machine together. And this slide really is just so indicative of that team. And Trade Ideas is going to take care of the machine side for you, and we'll try and do our best to help you guys take care of the human side when it comes to managing trades, which is always a good thing when we talk about trade of the week. All right, so typically we'll go to about a quarter to the hour, 45 minutes of stuff to talk about and content. This is what I intend to talk about. As usual, market recap. Andy has a couple of thoughts on very few trades today from our AI. That is not correct. Let me just, in real time, change that. Under Armour is our trade of the week. From there, we're going to create a scan together and kind of tell you a little story and how that one came about. Check on the alerts we set last week. I think there were some good ones, and then maybe we'll see if we can set some more alerts and pass those out and learn from them. And time permitting, last few minutes, we can look at a few charts that you guys may or may not want to look at. there's our trade of the week. We'll come back to that. As usual, we'll start with the S&P SPYs. Now, as I mentioned earlier, or maybe it was yesterday also in Jamie's webinar, there was literally been 2 periods where I went to cash and got very defensive. I telegraphed it and talked about it with you guys, those 2 periods. And both times I said, if we recover and get back above the moving averages, then I have to get long again and start looking for individual setups. Well, you know, I did that, participated a little bit back here on some individual trades. And then it happened again. And as I told you guys last week, if we just kind of maybe zoom back into our time machine, for the most part, that was it last week. We had a real megaphone building, and the megaphone, you know, looks something like that, or some people call it the dog cone of shame when they get home from the vet. But as that developed, we talked about whatever side resolves, you're going to really have to stay with that side. And what happened? A very intent price action in the S&P above, sideways for 2 days, and then new highs yesterday, new all-time highs again today. I think it's safe to say that, you know, when I was back on the sidelines and in cash for the last couple of days, I've been looking for new longs again, and it's just how you have to play it. I'll never kick myself for being wrong and going to cash in those periods of weakness and volatility, because as we've talked about, you know, the bars get very long, the volatility gets very wicked. And if you don't adjust to it, you can really take a good month and ruin it in just a couple of days of volatility where things are getting kicked around. So as far as that goes, that's one thought. The other thought is, you've heard it all before for the last week, the word rotation. And, you know, energy, travel, airlines, we talked about that last weekend. I'll touch on that. That was a good call. Airlines have done very well since we kind of mentioned last week to keep an eye on them. Chris and I did anyway. Financials, retail, you know, all the things that were benefiting from COVID, economy, the big tech and technology, they're no longer leading the way. I mean, this was a very decisive bifurcation now of the S&P taking the baton and moving forward with the rotation into the value stocks and some of the other things that hold up the S&P 500. And the NASDAQ technology took a back seat, maybe except for today and some of the semiconductors. But I will note, however, we had a little bit of a kind of an exhaustion, I think. You know, it's been a big move from 297 up here as high as 324. And a bit of a topping wick right there, settling right into the 50-day moving average. I think we could be in for a few days of kind of settlement, maybe some more sideways grinding, backing and filling, if you will. If we go to the S&P SPY, it might be more evident. What I'm kind of anticipating is maybe some of this over the next couple of days. And that's extremely healthy, trust me, as this S10 period comes up to meet it and the 20 resumes its job as the backstop. This is what I'm kind of anticipating today. So for the rest of the week, I should say. So there's really no bear case to be made. There's no real caution flags up here. You can't throw caution when we're back to all-time highs. I think really the story is the rotation that came out of tech and into the S&P 500. And again, last week, Chris and I caught a lot of hotels and rental cars and airlines were setting up for another push higher. And in fact, they did. And again, we'll take a look at a few of those when we revisit them. But that's a sign of a healthy market, that's for sure. When there's no place to hide, that's when it gets real scary. When 2 or 3 of these red bars continue to follow through and the buyers don't step in, that's where it gets scary. So I'll continue to be defensive if I feel like the market is going to do this again, and then you just kind of wait and see who wins the battle, and then join the side that won the battle. Anything I'm missing or you want to add over there, Andy?
No, you're exactly right. It's strange. It's like
Now.
yeah, and it's weird because the rotation can be frustrating at sometimes, because if you own stocks that are not like participating that day, they can get hammered. A lot of the traders saw that in their own holdings today. So I meant to say that. Yeah. So. And it could be, Steve, another sign of your exhaustion theory. So I can see profits taken. As a matter of fact, I shorted Tesla again. I shorted it yesterday and then some more today because it just had that look that it was exhausted and starting to roll over. So, getting back, Steve, to the SPYs, I just kind of wanted to tell somebody what I kind of like to do, and I don't think there's anything wrong with it. On those days where you think when things are getting a little scary, those days where you said you kind of sat on the sideline and was waiting for it to get back above the moving averages. I typically like to get short when I feel these exhaustions, because I know if you do catch that top, it can be very profitable. And now, when you're wrong, you got to get out. Okay, but I've hit Tesla, pretty good twice already, and I'm hoping, and I know if I ever catch, the top of the market and be in a good position like that Tesla short, I can get paid big. But yeah, a little channel there, huh?
No, what I'm
Stocks.com, huh?
No, and this is one of the reasons I'm only half invested. It's not pedal to the metal, and I don't have any shorts like you do. But I got to be honest with you, I'm so sick of seeing this. We've talked about this a lot. Divergence, all right? Yeah. New high, new all-time highs yesterday and today. And as you were talking, I pulled up the RSIs. Pulled up the RSIs, and we see a lower high in the RSI. Now, why would it be that we have higher prices, all-time highs today and yesterday, but the oomph behind it is just not quite there? And even back here, for God's sakes, we've been making high, and we've been making low. We almost have a triple divergence now. My God.
Exactly. Yeah.
That makes me not want to be fully invested. It makes me being very cautious, half in cash, half in other stuff, and tight stops. Let me give everybody a perfect example. I was talking about this today in my holdings. Let me get rid of that RSI. I was talking about I was going to be watching the stock, and Andy was also talking to me about it, and I did exactly what I've always tried to preach, and that is when a stock closes, I would wait till the end of the day to make my decision. I have regretted more often than not getting out at 45 minutes after the open because the selling was just vicious on the open, only to see that stock bounce back into play and wish I had not gotten out. Wish I had not made my decision to exit the trade, at 45 minutes after the open. I am now trying to make most of my decisions at the end of the day, and the stock is BORR. It's a small drilling stock, and I was in it for a couple days. Okay, it looked okay back then. The day I bought it, wedge, I was anticipating, I wasn't participating, I was anticipating something that didn't happen. And what I did is I just kind of froze my system here again. Yes, Dave, definitely negative divergence. But in this particular stock, as soon as my Windows 10 unfreezes, it's my machine. I just need to buy some more memory, I think. So annoying. I waited until the end of the day to make my decisive decision as to whether or not I wanted to be in this stock. And look at that. Ugly close, below both averages, no reason to be in. So I'm thinking I might have saved myself a little grief. This thing might just bleed for a few days, and I'll look back and be happy that I got out here, because my steadfast rule is wait for the end of the day, see what the close looks like. That's not the close I wanted. So I'm out. So I can't get these things to move either. So I'm very delicate. Back to Andy's, observation as well. We are in a very thin air up here. The wings don't seem to have much lift, because a lot of the individual names I was playing, there's many other names, they just weren't participating in the last couple of days. Well, that's all we got, I guess, on the market recap. If you want to take it and add anything on the few trades that we had today in the AI.
Yeah, not a whole lot to talk about, but we always like to look at the market first and see what kind of the AI had to work with, which was kind of a mess. Small gap up, never really could push higher, and then a lot of back and forth action, waffling around, and finally closing down just marginally. Barely, almost flat on the day. So makes it for tough. No matter what type of model strategy you're using, that could always be tough for trading. And it was no difference. Holly didn't see a whole lot today. Very few trade count today. Only 5 alerts coming from Holly. The first one of the day, boy, I thought that had some really oomph behind it. But boy, and this is the kind of thing it can be really frustrating. If you're going to buy, something up a huge percentage, you got to be quick to take profits. Holly called it at 261. I know it was moving kind of fast, but she exited at the target at 280 a minute later. So, you would have been able to get this, and then it went as high as 350. and then of course turned around quickly in reverse. So you had to be quick on that one, but still gave you. Remember, this is a 15-minute candle, so you did have time if you're a day trader to jump in that. I'm sure a lot of you in Barry's room probably did. But target was hit, and of course, if you held this thing, you would have got eventually stopped out. Let's see. Let's take a look at a not so good one. Okay, this route right here is as bad as it gets. Now, I love seeing these kind of patterns. Unfortunately, this did not work, but that was a potential reversal. I mean, things been selling off now for well over a month, and really, you had many consecutive down bars, and then you finally had a reversal today. Holly just happened to call it right at the peak. So a very, I hate to say it, but a bad call by Holly. Now, if this would have worked, and this could have been a multi-day hold, obviously it would have been a reversal and taken out what 5 days of candles. So that would have been an interesting one for a multi-day hold, but it didn't work. And Holly,
can I add something to that one?
Sure.
So as I was saying today, and also earlier, the human and the machine working together. Look at the bottom of that red area. That's Holly's suggested exit. Mm-hmm. What if you used my suggested exit, which I try to teach everybody, and I spoke again extensively today in the noon session, about using the first 15-minute candle that closes below the rising 10 SMA.
Right.
You got kind of an early look. That's you kind of getting up out of your seat and walking to the exits before anybody else really notices, and taking a bit of a less of a loss. So another good example of human and machine working together. Once you're in the trade, that's developing, and you can start to see that. The AI doesn't see that, but you can. And that's what I try to tell people, to try and simplify the risk management. Don't always necessarily wait for that stop out if it conflicts with what I'm saying there.
Yep. Good analysis there, Steve. I thought this DH shorten was a great idea. I'm kind of a contrarian play, and when I'm not seeing any follow through in a lot of the stocks like it was happening today, because the market just kind of opened up, gapped, and fizzled out. I thought this was a very a decent short opportunity, just kind of going, like I said, counterintuitive. Fake breakout didn't really happen. Now, it would have, had you held on and didn't take any profits, you would have went red a little bit, but then eventually it did roll over for a decent little moderate profit, at the end of the day. So I looked at 3 of them there. That's about all I'm going to look at. These other 2 were just kind of flat, but nothing real painful today. Obviously, there was one momentum trade that if you were quick, you could have done real well on, but I know how it is. I'm not one who likes to trade the first 15 minutes of the day. So if you didn't catch that, I totally understand. But Steve, that's about it for Holly. I'll shoot it back to you here.
Remember we used to be able to play Red Rover, and you could clothesline the other kids?
Oh, yeah. Oh, yeah.
Those were the good old days.
Those good old days.
And dodgeball.
Oh, man, that was brutal. Loved it.
Yeah. All right. So now we are finding ourselves again at the trade of the week, and I said again because the A table is just something I think is safe as long as we're in an uptrend. And I'm always trying to find things. People ask, well, what are you looking for when you see the A table? I'm trying to find things that are consolidating at least above the moving averages. This one, Under Armour had a nice move up and came back, filled its gap nicely, and just kind of been riding the moving averages. And then in the last week, we started to notice that retail was really starting to pick up steam. And so going into the weekend, retail was starting to show its head on a good Thursday, Friday. And so really, the trade looked like that right there going into the weekend. And the trigger was essentially a bit of a head start, not waiting for the high back here, 52-week high, but the 1961 print right there. Now, thankfully, we didn't get a giant gap up this week, so we didn't have to discuss that. Oh, and by the way, it's good to note that I think last week some of you suggested that maybe we get the trade of the week out a little earlier because we were talking about all these gaps that were happening in the morning, and maybe there was something to be said for giving our trade of the week a little earlier than 1 hour prior to the bell. So we heard you, and Scott took care of that, and I believe we got the trade of the week out a lot earlier this week. So that'll be the case going forward on that. But again, no gap, but right there, I'm going to draw that line. pretty much right where the stock opened up. There was our entry. And interestingly enough, that was, yeah, I'll get to that in a second. So a nice simple entry, and I think there was plenty of time pre-market too if you wanted to play around again. I think it actually went higher and then pulled back, gave us a nice entry on the open. First test of the day as we go through it, beautiful test of our pullback, bouncing off the intraday 10-period moving average and then pushing higher into the lunchtime. And then we just kind of lost it towards the end of the day, and then today gave some back. All right, so I do want to take note, you guys have seen this blue line on my screen a few times. This is what we call a 5-day moving average, looking at it through the window of a 15-minute chart. So all it really is, if we go to edit, it's a simple moving average using a 130 candle value. So if you use 130 candles on a 15-minute chart, you're going to get what looks like this. And this is kind of a, you know, the intraday 10 period is my strong momentum, but strong momentum never lasts long. It's going to come to an end at some point, you know, but when it does, I like to see a little bit of a backstop. And I found it interesting that not only back here, a couple of days prior, it found support at the 5-day, and then after giving back a little bit of what we had yesterday, found support again at the 5-day, a little bit higher. It's basically right there at our entry point. So this is a good illustration this week of a couple things. One, stocks don't like to necessarily move too far in one direction for multiple days. We had, there we go, 3 nice, two really good green candles there, and then we're giving some back, but we're giving some back in a very acceptable way. Intraday, again, on that blue line, we found support late in the day, and all we're really doing is we're just kind of waiting to see if we're going to get something like this again, like another flag pattern to possibly push the stock higher. So yes, it's always really nice when we get that trade of the week and it triggers on a Monday, and before you know it, it's gone 10% by Tuesday or Wednesday. Doesn't always happen that way in swing trading. Sometimes we have to sit. You've heard me talk about moving day, that one day where we really hope that we can sit through the whole thing, get a nice big green candle, you know, 6-8%, and then that's day number 1. And then we hold that into the second day for to flip and become a seller and to catch the momentum from that big green candle. Well, we didn't really probably get any of that because we just had a couple of green candles, and it was just time for it to settle back. So there's no harm, there's no foul, there's no reason to get out. We just want to manage the trade. And again, I believe the stop on this one is to not let the stock close, as I've mentioned earlier, not let the stock close below the 20-day rising moving average. So, you know, that's down here really at 1890. It's probably going to be about 19 tomorrow. If you want to be super conservative, you could use the rising 10-period moving average as your closing stop, but the 20 is so close behind it, that's why I'm going to consider using that one as a backstop. So trade is intact. Still a few days left in this week, and I wouldn't be surprised if it just consolidates for the next couple of days and then another assault above 20 next week. We shall see. Let's see, somebody's asking me a question on the 130. Can you show the 130 indicator setting again? Sure can, Damien. So what we've got here is a 15-minute chart. So you use a 15-minute chart, just go to indicators and then add a simple moving average. There it is right there. And then in the value of the simple moving average, you put in a period of 130. 130 15-minute candles will equal 5 days exactly. And it rolls over and updates every 15-minute candle. It will update that way. That's what's nice about that one. You're not using a daily candle. And if you start to use that, you guys, you will start to notice a lot of correlation in the stocks that you trade, and you'll start to see that. I mean, matter of fact, I can just give this out as a cloud setting for anybody else that maybe might want it and was going to configure it later. I can drop this chart. I'll call it Steve's chart in the chat window. Yeah.
And Dave, no, I haven't tried that 230 period on a.
Well, you know what that would be? 230?
Would that be a 10-day, wouldn't it?
No, 260. Yeah, because it'd be a 10-day.
260? 260
Yeah.
or 230? Okay, he's saying 230. No, he said 260.
He meant 260.
Yeah,
Oh,
yeah.
So yeah, that would be a 10-day.
I'll give that a shot. Take a look,
I'll give
Dave.
that a try too. Yeah, thanks, Dave. Anybody can do that, of course, and start to find some interesting correlations there as well. It'll actually drop. Yeah, it'll show you this line here a lot more closely. Interesting. I will try that. That's a good point. I'm looking forward to trying that. Thank you, Dave. Anything you want to add on the trade of the week, Andy?
No, that's indicative of what we see in the market right now. It just seems a lot of breakouts, and especially in these thick stocks. They seem to fizzle. That doesn't mean that it's going to roll over and go down. But Steve's right. I'd keep an eye on that moving average. Did you use the 10 or the 20 this week?
20. That's what I was saying. I used the 20.
Okay.
Yeah.
Okay. Yeah. So just keep an eye on that. He's right. If it closes below that, it's probably done for a while.
I wonder what would be a good example of that 10. I'll have to try that another time. All right, here's what I'm going to do here. This is kind of funny. Real networks. Remember real networks, Andy?
Oh, yeah. Oh, yeah.
All right, so let's take a moment to talk about real networks. This was my learning curve when I first learned about it's probably best to try and surf the market and get those 2 or 3 day moves, day and a half move, and grab that 10, 12% and pocket it and move on. This was back during the 99 bubble, 2000 bubble, and everybody had their pet stock back then. But the one that was going to take them to the promised land. I'm going to buy the second house on the lake, get the car, the whole thing. Mine was real networks because they came in and all of a sudden I'm like, oh man, you can watch video on the internet? Wow, that's really cool. Microsoft, they had a competitor called Real Networks. Well, during the .com bubble, they blew up over like 100. They were up around $100. And I was in it, and I had ridden it up, and I forgot what my basis price was, but this was the one that broke on me, and this was the one that taught me. That's why I'm bringing this up. It taught me not to get married to a story or an outcome or a lifestyle or a trade or any golden gorilla. I mean, you can, but chances are it's going to be really hard to find that one. And especially when I was in a stock going from 10 to 100 in a few months, I didn't know any better. I didn't know that it could come back to 20 real quickly. But I just wanted to divert on that for a moment to remind people that you got to take the money when it's there. I sat through day after day of just punishment, watching my unrealized P&L go down when I had already mentally spent a lot of that money. And all it did was just freeze me each day from trading effectively and doing what I should have been doing, shorting good stocks and adjusting to the market. No, it was just a deer in the headlights. So we've all gone through it, and maybe somebody's going through some of these right now, but just be aware that sometimes you got to rip the Band-Aid off these things. All right, the reason I brought Real Networks up is because today, sometimes we get our content for these webinars in the strangest ways, and today it was Chris Varley saying in a back channel, oh man, I missed my Real Networks entry. And it made me think, well, what did he miss? What did he see? Oh, look at that. Yeah, so we saw the daily chart. It's been going nicely. Looks like it gapped up, and Chris Varley was smart in not being the rookie in chasing that entry. But wherever it was he wanted to see it, I would like to see it kind of like what we've been talking a lot about, a 10-period moving average, right where I put that arrow. And when Chris said that, I think it was basically kind of back up here. He's like, I missed my entry. I'm like, what did he miss? And it occurred to me, well, wait a minute. It would have been nice to see it there. We can do that. We can do that. So why not show everybody how to just kind of walk through a concept trade? So rather than just go from scratch, I do have some prepared, like a cooking show. I've already done the egg salad preparation here. This is what I came up with, and as soon as I hit OK, I'll tell you how happy I was to see that. I mean, I didn't even have to revise it once. I'm like, okay, maybe we're onto something here. Before we look at the others, what did I do? All right, so here we have a stock that's been running up for a few days, and this is an interesting concept. I mean, a lot of times these things will run, but they won't run without at least maybe throwing a fit on the opening bell for an hour or so, and then they'll find a spot, and then they'll momentum slingshot higher. And a lot of times that spot is that magical 10-period moving average right on the 15. So what did I do from scratch to say I want to see this? All right, so well, it's going to be a new low on the day, so that's my event. So I put the new low in. Price 5 to 100. Now these stocks are likely to gap, and I encourage them to gap. This one certainly gapped, but I don't want to see anything that's too much of a gap. So I put a max filter in there of 10%. So 10%, anything below, we'll take it. Change in 5 days. Well, I noticed this thing's had a pretty good run. And again, I'm trying to catch these things that are like running on consecutive candles. When's that magic spot to jump in and catch it? Well, for now, I gave it the safety net. I like to give it cute little names. I'm calling it safety net. We could call it a bunch of things, actually. We could call it stage diver. We could call it trust fall. We could call it tow rope. Maybe you guys can give me some of your, somebody called it fallen angels, I think earlier. Tons of fun names we could give it. But the point was, it's been up 5 days. So minimum 5% up 5 days. Okay, these are things that are certainly in motion, in play. Here's the kicker. Change in 15 minutes. This thing had to have stage dived 3% in 15 minutes. All right, well, I could probably play with that value, but that's the value I chose. And then 500,000 average daily volume. And then the time of day. Well, since I'm doing a 15-minute new low, I'm really just kicking out the first 15 minutes of the day. So I'm saying don't show me anything until 9:45 Eastern, and then stop showing me about an hour or 2 hours into it. And that's really the nuts behind it. And the second I clicked it and it said real networks, I said, what? And I clicked it. Look at that, arrow popped up right there. And that's it. I mean, I know Chris is watching. That's as simple as that. So what else did we get? I'll tell you one thing I like. I like seeing not seeing 57 names in here. Oh, LC, interesting. Look at that. Hey, it's a nice runner. It's been up on the day, but where do you jump in and try and play the momentum without, chasing the gap or being burned? You do it at the 10 period early in the day, and LC, that one seemed to work. BLDR, okay, well, that one tried to work, and then what happens? We use my Steve Gomez risk management. If you didn't like that candle, it gave you a second candle to close below to tell you the momentum's probably gone. And that saved you a lot of headache and heartache for the rest of the day. All right, for the most part, this one worked. Didn't really go anywhere. And then this one worked very nicely, as a matter of fact. So, not bad. Not a lot of, definitely quality over quantity in this situation. So, if you're new to trade ideas, you can see just how powerful our program is. FinViz can't do that. There's a lot of programs out there that they just can't do that, where you figure out what it is you want to see, and then at the moment in time at which you want to see it. Yeah. So
real-time alerts.
Yeah, I felt like, when I did that today and I just goofed around and saw that this was definitely content material to demonstrate exactly the value of trying to find exactly what it is we are looking for. So knowing ahead of time people will want this, I'll go ahead and share this. Boy, I'm really freezing up a lot this webinar. All right, so that's real time. Let's go, and I'll put this in the cloud mode so anybody that wants that can have that. And if you've got a better name for it, by all means, let me know. And let's see, but I'm going to call it, what do I call it? The safety net. Looking for things in momentum. They're pulling back on the open and finding that sweet spot. All right. See if I'm missing anything here.
Maybe George, let's see, because I think he's referring to the TOW. He's saying, so it did not fall below the 130, right? The TOW?
No, it didn't. No, it didn't.
Okay, yeah.
No.
So yeah, that's what's going on, George.
130 with on Thinkorswim doesn't show, or does he mean Thinkorswim? I'm not sure.
It just says it doesn't show today close below the 130, which is the same as ours, right? Yeah.
Yeah. Right. Correct. I'm just reading your question, Joseph, to see if it's the right place. Is there any? If you have, I'll tell you what. If you have a scan that you put together, you said, okay, Joseph, what I would do is I would send your scan, your cloud link, just like I did. You just right-click and save your cloud link and share it, and copy and paste it and send it to info@trade-ideas.com. And one of us here, it'll be a support ticket, and we can really break it down, and then we can. Yeah, I can't do it here. Send it into info@trade-ideas, and it'll become a support ticket that we can really break it down and communicate with you there.
Yeah, and Joseph, also, that was the collaboration that you did. Make sure you go through the process of doing, Steve can show you real quick. Yeah, real quick.
Save and share, and then copy all, and that's the code that we want to have that we can break down. Real quickly, last week, we gave out these alerts. So, and these were just the simple stuff that was consolidating and moving higher. And this is also why I said, watch those airlines, guys. UAL, just focus on the green line 5 days ago, and these were the ones that we set and gave out last week. Nice consolidation, nice push. You know, would have been nice for the trade of the week to do a bit more of that, but that's an airline. Hotels and resorts, again, that was the theme of the week last week. They just really had some nice follow through, and we gave you guys these. Coles, another retail. Jets is the ETF for the airlines. So yeah, a lot of good follow through on some of another hotel. So as we went through and set alerts, which is what I'm going to do right now, this is kind of the stuff that there's saved, that another airline, that's kind of the stuff we came up with. So I'm going to quickly go through as I usually do, and we'll see if I can find anything of interest here. I guess I'll go through, yeah, the main A table. Why not? Even though there's some high price stocks in here. We'll start with the short float up top. AMCX has been on fire, but I'm looking for things that are really consolidating. Let's zoom out a little bit more. Take a look at these. Nope, can't chase that, even though that might be a good one for tomorrow if that thing gaps up and then hits our safety net. Let's see if we can find anything here real quickly. And while I'm doing this, that doesn't look bad. While I'm doing this, if you guys have a few stocks that you want to, the last few minutes of the day, we'll take a look at a few charts, maybe a dozen or so before we go. This is kind of becoming interesting, this little wedge here, but it's still kind of underdeveloped. I'm going to pass on that one, honestly, WWE. Wait, do you notice, Andy, did you notice the Viacoms and the Discovery channels and the AMC channel?
Yes.
Everybody's watching TV at home during COVID, and I guess they're finally showing up in their numbers. Who knows? Again, I'm just looking for something that's consolidating. We might have to go through a dozen of them before we see something we like. That's not bad. What is this BCRX? Pharmaceuticals, though. I hate pharmaceuticals. But you know what? No, I'm not gonna force it. Remember, what did we talk about on the open? This market might be tired. I'm not saying it's tired. I'm not predicting it's tired, but it might be tired. Therefore, we're not going to force anything. I will say if Angie gets back above that 1595, I like that. Angie was on the short list. Oh, let's revisit that. I don't think there were a lot of good ones that really move, but Angie was on the short list of stocks to watch that were also on there. Bed Bath & Beyond had a little bit of follow through. Actually going to keep an eye on that one too. We're going to mark that one up as well. All right, so back to Angie, SFM, no chase. Yeah, it's looking tired, quite honestly. Big move in Macy's. Michael, I don't know how Michael Noss saw that, but he was in Macy's. There's our Dish Network, more TV. I'm just not seeing a whole lot of things that are exciting me here. You know, that RVLP would have been real nice, guys, right there. That would have been real nice. And then look at how it resolved itself coming out of that. So, you know, maybe the timing of the jump rope just isn't perfect here on March 16th, Tuesday, but nonetheless, we'll still see if we can find something. The AEO almost looks like a train leaving the station, but I'm not going to force it.
Pretty sloppy.
It is pretty darn sloppy. I don't know what that is. Real quick. What was that? Yeah. The old trade of the boy, did that thing get volatile or what? My God, that was an old trade of the week. Designer brands, huh? You know, that doesn't look bad. I'll go ahead and just for the sake of getting our third alert in there because we don't have a whole lot. That's for sure.
Well, it's okay if you want to take a break one week. I mean, don't force it.
That's right. There's the trade of the week last week. I don't know what the heck that thing is. And then GoPro, can't chase that, but GoPro might be something you gaps up tomorrow and drops into the safety net. Who knows? So guys, there's not much really to give out, you know, other than I can give it, but price alerts are just 3 of them. And then we'll take a look here for 3 minutes or so at what stocks you guys want to look at before I bring Scott back in. I'll be all price alerts. Okay, who's first with the
ADM?
Mark with Archer Daniel. Not bad. It's a decent consolidation. It's had a nice run down here from 50. Very long run from the bottom of COVID. it just looks like a lot of other things. I think if it closes, let's just do what I did on the trade of the week. If it closes below that 20-day moving average, you've kind of lost your backstop, in my opinion. So just keep an eye on that. Cargill, similar. No, not similar. C-A-R-G. Okay, Carguru.
Yeah.
Interesting. It seems like they're really trying to find some support down here. You know, if it can get back above that 200-day, it might be looking for something. It seems like it's exhausted to the downside. So if you took an entry down here, you know, you've got a pretty good risk reward, but it's got a lot of work to fight through to get back up. Yeah, Save was given at a price rise at 32. George, AMCX, yeah. GTT. Been a pretty nasty downtrend. I can't say there's an awful lot I like about this, and you can see the 20-day moving average is still having something to say about it. So that's really your first order of business on that one. AFMD, somebody's asking about. Definitely broke higher. Probably some news over there.
Well, you're in it because it's not probably one we'd chase up here.
No, I wouldn't chase up here, and it didn't even give you much consolidation before it took off again. So. There's that rising 5-day moving average. Maybe keep an eye on that one. Didn't even give people much time there. So there's a lot of excitement behind that one, but I don't like to chase them when they're this far extended above the moving averages. Yes, the A table is in there, Sammy. It's in the chat window. If you didn't get a copy of it, you can always email info@trade-ideas.com, but that one should be in there. All right, Netgear, NDNTGR.
The blast from the past.
Boy, you know, it looks very similar to kind of like what the market's done in terms of you know, breaking out of that range. It's looking good, and these moving averages are going to come up to support it. So, you know, long term, it looks okay. Doesn't look bad. You can't really say much bad about Netgear there. In that one running like crazy. Yep. We just talked about that one. Same situation. I wouldn't enter a trade up here when we've got the moving averages way down here. You're just going to want to wait for the jump rope to reset in that one. You know what somebody else has been really liking, and you know, Stan the Trading Man liked this one, but Jake from TrendSpider confirmed he actually likes this. It's an interesting technology, microwave video networks they can set up for like sporting events and interesting concepts, I guess. The chart's still, you know, hanging in there, but you know, the chart caught Jake's eye, and if it caught Jake's eye, it's worth it for me to look at. A couple more here. BLRX. I'm frozen again. Jeez. Give me 1 second. All right, so after Dave, Sono. Dave snuck in the last one. A few more to go after Sono. We'll bring Scott in. So we've got BLRX real quick. Doesn't look bad, just needs to do some sideways consolidation. And if it breaks out of those last 2 days, then you might be worth keeping an eye on. Oh, Smith & Wesson. Very familiar with Smith & Wesson. Swabi. I like it. Look at that.
Yeah.
Swabi dancing there. Swabi dancing there along the 50-day moving average sideways. I'm actually going to set an alert. I like that.
Yeah.
I actually like that. I might participate in that if that alert goes off. Been in and out of that one, Paul. Yeah, I like what you're seeing there, Paul. AMCX, we've talked about this one, I think. Very high short float, got ahead of itself yesterday, but I'll tell you what, if AMCX comes back and touches that price at the 10-period moving average and creates kind of a jam down scenario, might be worth it because there's still a lot of short sellers that are probably wanting to get out of that thing. Bang, a few more here. That doesn't look bad at all. I like that. Diamondback Energy, crude petroleum, huh? Looks very similar to the other energy stocks that are out there. That's a very nice looking chart. Whoever put that one in there, George, good job. And Bobby, we did Bed Bath & Beyond already. I put an alert in that one. Sono probably needs to come back and consolidate a little bit. It's had a nice run since 34, but hanging in there. AMCX also looks very similar, yeah, to AMC. We did that one. That's why it looks familiar.
Yeah.
I just get in a zone here. This one doesn't look so great, CUN. Dimitri, you need to get some work done on this one. It's been under pressure. If it can't break and close above that 469 level, that's a good first start, but the next bet is to get above that blue line the 50-day moving average. All right.
Yeah.
Yeah, go ahead.
I was just going to say, it's always discouraging when you see it try to break out of a range like that and just get slapped right back down. That's usually a sign it's going to stay in the range a little bit longer, but you know, never know.
All right, and that's my sign to bring Scott back in. So thanks for all participating, and good questions, good stocks. Some of you had a good eye on a few of those today. All right, so hello, Scott.
Yeah, sounds good. Thank you, Steve. Hope everyone has the earnings ebook. It's free. Go ahead and grab it. It's got some great strategies for you to employ in your trading. It's also got some cloud links you can use to directly inject some of the strategies talked about into your layout and trade ideas. Also got a podcast. Hope to have a new one out sometime pretty soon. But search for Trade Ideas Podcast. Add us as a subscription. Download the latest episode. You'll be ready to pick up the next one as soon as it comes out. And check out the previous interviews in there that we've done. There's a promo code, Opportunity, saves 15% off your first month or year of trade ideas. Use that before it expires. You can also use that, again, as I mentioned, as an upgrade. You can find Steve on Twitter at DayTraders. Also look for @TradeIdeas, Facebook Pro on Facebook. Trade Ideas Pro on Facebook. And shoot any of your questions to info@trade-ideas.com. That's where you can get all your questions answered. Thanks, Steve and Andy. Have a nice rest of your Tuesday.
All right, see you guys next time.
Thanks, everybody. I'll see you on Thursday.